What happens when the regulator also becomes a shareholder? Again, power, incentives, accountability. When the same government that writes the rules starts buying shares in companies and becoming owners inside of those companies, those three collide. And we better pay attention because this week, Washington just bought a 10% ownership stake in Trilogy Metals. And it also came with warrants for another 7.5%. That means Washington could possibly own 17.5% of Trilogy Metals. That's not a grant. That's not a loan. That's the U.S. government on a company's cap table. And oh, by the way, they are backing the mining claims now in Alaska's Ambler District because they are now owners in Trilogy Metals. And it's not a one-off. We've gone into other videos on this before, and we've watched this pattern build. The government took a roughly 10% stake in Intel. The Pentagon put in $400 million into MP Materials. By the way, this made the Pentagon the company's largest shareholder if it also exercises its warrants that it now has in them. And DOE, well, they just reworked the Lithium Americas deal to include a 5% stake in the company and 5% in the Thacker Pass joint venture. So here's the worry. As the government becomes a shareholder, the line between public duty and private gains blur, and the stakes for accountability skyrocket. I mean, look at just what happened today. The federal government invests for a 10% stake in Trilogy Metals with warrants for another 7.5%, and Trilogy stocks shoots up almost overnight by 244% as of this recording. That single action from Washington created hundreds of millions of dollars in market value for the company, but also hundreds of millions of dollars for people. And it's in their pockets. Now, think about who inside the government sees these types of deals first. Who drafts them? Who coordinates them? Who supports them? Who signs off? We're asked to trust that accountability will be there for those who abuse their positions of trust and power, because if their moves can swing a stock's value that dramatically, it's important. But can we really trust that the same people with access to the timing, the terms, and the targets of these deals aren't also positioned to quietly profit from them? I mean, that's not cynicism. That's common sense colliding with human nature. And it's also colliding, unfortunately, with history. After more than a decade since Congress passed its Stock Act and said it wouldn't use any insider information, it made it illegal for staff members, representatives, and senators to use insider information. Since then, there has not been one publicly reported criminal conviction of any sitting member of Congress or any congressional staffer for insider trading. Investigations? Plenty. Late disclosures? Constant. Convictions while in office? Zero. And when the biggest scandal in 2020 hit, all the Senate investigators could do was close with no charges. But after people leave Congress, accountability suddenly shows up. For instance, former Representative Chris Collins pleaded guilty and was sentenced in 2020. Former Representative Steve Buyer was convicted and sentenced in 2023. Both cases involved non-public information from private sector roles that they had after they left office. If that's what happens after the power and the staff badge are gone, doesn't it strain belief to say that none of this behavior happened during their time in Congress when access to sensitive information was greatest? I mean, human nature doesn't flip like a light switch. If the incentives were there then and the enforcement bite is this soft now, what do we think people are going to do when they have more power and less scrutiny? What do you think? Well, this is a core tension of America's new state capitalism. Power incentives are growing faster than accountability. If Washington is going to sit on corporate cap tables, Intel, MP Materials, Lithium Americas, and now Trilogy Metals, then the guardrails have to be real. Faster disclosures that actually hurt when they're late, independent enforcement, and bright line limits on trading in sectors where the government is taking equity. Because if we're going to run this model, and it appears that we are, power without accountability is a trade which this country cannot afford. If you found this video insightful, please remember to like the video and subscribe to our channel. Thanks for watching.